Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. To expand on the dynamics of the currency exchange between the US dollar and the Iraqi dinar, it's essential to understand the underlying context of why exchange rates fluctuate and the broader economic and political factors that impact them. On the surface, the numbers reflect what may seem like slight shifts in currency values, but these fluctuations are tied to a complex network of financial, political, and market forces both within Iraq and globally. When discussing the fall in exchange rates, as reported by the agency, it becomes important to break down how and why these rates change. Exchange rates are the price of one currency in terms of another. In this case, we are talking about the value of the Iraqi dinar against the US dollar. The value of a currency is often seen as a reflection of a nation's economic strength and its political stability. However, numerous other factors come into play, particularly for Iraq, a country that has undergone significant turmoil in recent decades due to wars, political unrest, and economic instability. The decrease in the dollar's exchange rate against the dinar in Baghdad and Erbil may seem marginal at first glance. The dollar's rate dropped with the opening of the Al-Kifr and Al-Harithiyya stock exchanges in Baghdad, settling at 149,600 dinars per $100, compared to the previous day's rate of 149,900 dinars. While this represents a small difference numerically, every fluctuation carries with it broader implications for both the people and the economy. Even the smallest shifts in exchange rates can have a tangible effect on the cost of imported goods, the savings of the population, and the broader macroeconomic policies of a country. In Baghdad, where the reported rates for currency exchange stores stood at 150,500 dinars for selling $100 and 148,500 dinars for buying the same amount, these shifts can be reflective of the daily ebb and flow of demand for foreign currency. Similarly, if the dinar strengthens too much, it might intervene to avoid inflationary pressures that could arise from an overly strong currency. The importance of Baghdad as a central hub for Iraq's economy cannot be understated. As the capital city and largest population center, it naturally exerts a significant influence on the nation's financial markets. The Al-Kifr and Al-Harithiyya stock exchanges are essential venues for currency trading in Iraq. These exchanges act as a barometer for the broader health of the economy, with exchange rates often reflecting investor sentiment, confidence in the local economy, and the geopolitical situation. When rates fluctuate, it's not just a technical shift, it's an indicator of broader national and international trends. Moreover, when we look at the rates in Erbil, the capital of the Kurdistan region of Iraq, which were recorded at 149,600 dinars for selling and 149,500 dinars for buying per $100, the situation becomes more nuanced. The Kurdistan region, while being a part of Iraq, operates semi-autonomously, and its economic dynamics are often slightly different from those of Baghdad and other parts of Iraq. This increase in dollar reserves can lead to a stronger dinar, as the central bank has more dollars to support the currency. Conversely, when oil prices fall, Iraq's dollar reserves shrink, which can put downward pressure on the dinar. Oil prices, however, are not the only factor at play. Iraq's economy has struggled with a lack of diversification, meaning that it is heavily dependent on oil revenue. This dependence makes the country vulnerable to external shocks, such as fluctuations in global oil prices, changes in foreign investment, and geopolitical tensions. Political instability, both within Iraq and in the broader Middle East region, can also have a profound impact on the exchange rate. Anytime there is uncertainty about the future direction of the government or concerns about security, investors may seek to move their assets to safer currencies, such as the US dollar, leading to a weakening of the dinar. Inflation is another important consideration when analyzing exchange rate fluctuations. If prices are rising rapidly within Iraq, the purchasing power of the dinar decreases, which can lead to a devaluation of the currency. In such cases, the cost of imported goods, which are often priced in dollars, can rise significantly, making it more expensive for the Iraqi population to purchase essential goods and services. This, in turn, can create a feedback loop where the weakening of the dinar leads to higher inflation, which then further devalues the currency. Another factor to consider is the role of remittances and foreign aid in Iraq's economy. Many Iraqis live and work abroad, particularly in countries such as the United States, the United Kingdom, and the Gulf states, and send money back to their families in Iraq. These remittances often come in the form of US dollars, which can increase the supply of dollars in the Iraqi market and potentially lead to a strengthening of the dinar. Similarly, foreign aid, whether in the form of financial assistance from international organizations or bilateral aid from other countries, can also affect the supply of foreign currency in Iraq, influencing the exchange rate. Lastly, it is worth noting that global trends in currency markets can also impact the exchange rate between the dollar and the dinar. The US dollar is considered a safe haven currency, meaning that in times of global uncertainty or financial turmoil, investors tend to flock to the dollar, driving up its value relative to other currencies. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.